Hello, everybody. This is Brian Lysing with Financial Brokerage, and welcome to today's webinar. This is the first in a series of 6 that we've called Life Insurance Basic Training, and they are all designed to help you feel more comfortable in asking questions, quoting, presenting, and selling life insurance through your agency. And this series is probably geared more towards people who do not specialize in life insurance. The bulk of your income comes from other insurance or financial services related sources. And again, we want to make you more comfortable bringing this up so you can be successful with your life insurance sales. Today's webinar shouldn't take too long. I'm projecting 15, maybe 20 minutes at the most. All of your lines are muted, so we can cut down on background noise. You do still have the ability to ask questions. You can type them in the control panel you see on your screen there, and I will get to as many of those as possible at the conclusion of today's webinar. So today, the goal is to give everybody a walkthrough, or in some cases, a review of our primary life insurance quoting engine on the website. And before I get into that, though, for those of you who may be new to financial brokerage, we are a national marketing organization working with life insurance, annuities, long-term care, disability, critical illness, Medicare supplements. I'm one of the few people who handle life insurance over here, and I have counterparts that take care of the remainder. We've been doing this since 1995, myself since just after the year 2000, I think, somewhere in there. At any rate, what you see on your screens right there is the main page of our website, financial-brokerage.com. There's no PowerPoint for today's webinar. We're going to be digging into the website itself, and this is going to be the first thing you see when you go to our website. So let's go ahead and dig into it here. I am already logged in, and one other thing I should mention is there's probably going to be a slight delay between my speech and what you see on the screen, just looking at past recorded webinars here. So I apologize for that slight delay. But in the upper right, the first thing you're going to want to do is log in to the website. Otherwise, you won't be able to access the quoting engine. Since I've already done that, it says log out. I'm not going to click there again. But when you want to get into running quotes, you can either go to the quick links down here and click on term and UL quotes, although I usually hover over quotes at the top, and it brings up really the same toolbar. You click on term quoting tools. That term is a little bit misleading because it's not just term. You can get to GUL quotes as well over here, and we're going to be covering how to do that in this quoting engine as well. The version with the needs analysis, that's something we're going to cover in a future webinar, but for today's purposes, we're going to go right into the quoting engine, click on term and GUL quotes without needs analysis, and that's going to bring you over to another tab. It will take a minute or two to load on your screen. All right, and so when you're in here, it should bring up your name as the agent, your phone number, license number. None of that is required. In this quoting engine, it's powered by iPipeline. So if any of you are familiar with the online life insurance applications, you'll know that anything with a yellow background is required information. If it has a white or a clear background, it's nice to know, but you can run the quote without completing those sections. So the first page here is pretty straightforward. A birth date is always more accurate than putting in the client's age because the calculator can figure out what the client's actual age is, what their nearest age is, and it knows exactly which companies use which age. I'm going to create a fictional client here. Let's say this person was born in 1980. As soon as you click anywhere else in the field, it will show you their ages. In fact, we should probably adjust this a little bit here. I'm going to say this person was born in April. That way you'll be able to see that the computer calculates their actual age, 41 in this case, and their nearest age, 42. We're going to choose a state that is warmer than the state that our office is in. Go with Arizona. And the next section you want to complete is the product information section. And we're going to start with term, but if you click on the drop-down, later on we will cover the GULs. I would avoid the option that says term with simplified issue, and we'll show you why later into greater detail. But that really refers to a little bit older type of product that not many insurance companies offer anymore. You will get very few results if you select term with simplified issue. So we want to go with term. There's nothing to choose in the product group drop-down. The term length, this gives you several options. I can tell you right now, none of our companies offer 5-year term. Very few offer 1-year term. And very few offer these terms in 1-year increments. You'll see many companies, if you select a term length that's divisible by 5. In this case, I think I'm just going to go with 20 years. We do have a few companies offering 25. Everybody offers 30, and there are 2 or 3 offering 35 or 40-year terms if your clients are young enough. All right, the next field we want to go to is the death benefit. The initial page allows you to run up to 3 death benefits simultaneously. The next page you'll see we can add additional face amounts in there as well. A couple of things I want to cover here, though, for you is that a lot of times I get phone calls. People say, I was using your quoting engine, and I didn't get any results, or I only saw one company show up. And often it's because of the face amount. If somebody tries to run something below 25,000, you'll see no results. If you run 25,000, you'll see one company for term, maybe 2 for the GULs. 50,000, we see a few more. Most of our insurance companies start offering coverage at $100,000. And there's a couple that begin at even higher face amounts. So if you're dealing with a low face amount, just be careful. And even at that, in fact, we'll show the example here. You'll see that there is very little difference between, say, 50,000 and 100,000. Many insurance companies only offer standard rates at 50, whereas all rate classes are available starting at 100,000. There's a rate band or a discount at 100. There's also usually a discount at 250, sometimes at 500,000, and then at $1 million. So if you were getting close to one of those amounts, let's say the client says they want $200,000, run 250 at the same time. Sometimes 250 will cost less. If it doesn't cost less, it may only be $1 or $2 more per month, and it makes sense to apply for the 250. But that's the face amount field. The riders section. In fact, I was speaking with somebody a few weeks ago regarding this webinar, and they had asked specifically to cover some of the items in here. So we want to make sure that we do that. There are 4 riders that this quoting engine allows you to add to a term policy. And the first is the accidental death benefit. Not every insurance company has that available. Usually what that will do if you add it is it will double the face amount if the client dies as a result of an accident. Now there's a cap on that, usually 250 or 500,000. So say your client's applying for $1 million, they won't get $2 million if they die in an accident. It would be the $1 million plus the additional 250 or 500. This rider doesn't cost much, but I have an opinion on that you either need a certain amount of coverage or you don't. And in fact, if you die of natural causes, you probably have a need for more coverage then than you do if you died in an accident due to all the medical expenses associated with a natural death in many cases. So we rarely see that waiver of premium. If the client is disabled and unable to work, that rider would allow them to waive their premiums if they qualify. Return of premium, that's another rider that we used to see a lot in the past, and very few companies offer that now. I think there are two that offer a return of premium. But if your client gets to the end of the term, they get all of their money back. If they decide to cancel the policy before the end, they will get a percentage of their premiums back. Again, it's pretty rare. It used to be priced much more competitively 10, 15 years ago, and these days it's just not. You can also put on child riders, and this is a little confusing at times. For some strange reason, even though it pays out death benefits in dollar figures, right? You buy child riders in units, and one unit is equal to $1,000. Again, if anybody knows why they added this level of confusion in here, that would be great for me to know. But typically we'll see about $25,000 of child rider available, and the price is the same whether the client has one child or they have 12 children. It's usually about $5 or $6 a month for $10,000 of coverage. Again, it doesn't matter how many children they have; they just pay the one premium, and all children are covered for that amount. If one passes away, the rider is still there, and all the other children are still covered. They usually have a conversion option where they can convert. Usually, you'll see 5 times that amount at some point in the future to a permanent plan. So those are the riders. And then I know the other thing I was asked to cover specifically were table ratings, and we're going to get to that in the health section here. So the next thing you want to do to run a quote is to figure out, well, what rate class are we going to use for the client? Now, if you have a pretty good idea of their health and you're fairly adept at running life insurance quotes, you can click on Select Health Class, and then you can choose the rate class from the drop down below. I will caution you, if you select all, you are going to see so many results that it's going to be hard to sort through all of them. So it's best to select just one rate class at a time. If you're dealing with something below $100,000, it's probably okay to mark just all non-tobacco, because you won't see many results anyway at that level. But for these purposes, maybe I'll mark preferred and standard non-tobacco. Now, if you've done an underwriting pre-screening with me for one of your clients who's had some significant health history, maybe they've had cancer or they've got diabetes, they've had some sort of heart problems, those are all fairly common, chances are the insurance companies will come back and give them a table rating, and you can add that in the quoting engine right here. Now, for those of you who aren't familiar with these, a table rating is basically a surcharge on the client's regular premium, and each table usually represents a 25% increase in the premium. So a table 2 would be usually the standard rates plus 50% more, or 150% of the standard rate. A table 4 would be basically double your standard rates for that particular client. You don't need to worry about those at all unless we've done some sort of a pre-screening and a table rating has been recommended. The same thing goes for the flat extras. Now, a table rating is applied for all years of the policy. A flat extra is usually applied for a certain period of time, and you can see that in the select years drop down on the far right. You might see $1.50 flat extra, or maybe $4 flat extra, and that's a surcharge that is applied per $1,000 of coverage. So if it's $1.50 flat extra, it's an extra $1.50 for every $1,000 of coverage the client is applying for. Again, typically those drop off after a period of time. Now, how do we get to figuring out what those table ratings are or flat extras? Well, there's a couple of ways. One, you could go over here to enter health profile. And you can enter some very basic health information on your client to help determine what rate class they would qualify for. So I think the client's build is probably the best case scenario, or where this works the best for most clients. You can put in somebody's height and weight. In fact, let's see if I can remember. I had one emailed to me earlier this morning. The person was 5'3". I think they were like 255. That's going to result in some table ratings. And to figure out how many, we can just hit get quotes. And it's going to load our results. And we don't have, with something like Build, we don't have to go email the insurance companies to figure out what their rate class would be. Once it shows up on your end, you can see for this person, Protective was going to give them a table 5, but Banner a table 6, AIG a table 7, Pacific a table 8, Prudential a table 3. The nice thing about this engine is normally you would think the higher the table rating, the higher the price. Well, in a case like Prudential here, their base plan is priced so much higher that their table 3 actually costs more than Pacific Life's table 8. That's where this quoting engine really comes in handy for you. It can sort all those, and you don't have to worry about running multiple quotes. Now, if you want, you can also click on the Add Health Details button right below the client's build. And actually, before we do that, I guess we can leave that alone. And you will see a few categories of details that could be added. Now, some of this information, you're not going to know. The client might not know it. But, for example, if you click on health conditions, if a client has some high blood pressure, if their cholesterol is pretty high, or maybe they stopped smoking 2 or 3 years ago, you can input all that information. And it will tell you which companies will offer what rate class. Smoking is probably the best use of this section of the engine right here. Let's say somebody quit smoking 2 years ago. Some companies are going to give them preferred rates. You might find somebody that offers preferred plus. Some will still give standard. How do you know? Unless you open up the underwriting guides for 20 companies. Well, this quoting engine can do all that for you and let you know who's going to offer what rate class. Same thing with family history. And with this, they're concerned about parents, sometimes siblings, and events that happened prior to age 60 or 65. If your client had a parent that had a heart attack at age 75, it doesn't matter. If they had that at 55, it matters and can definitely affect their rate class. If they themselves are preferred plus, it may knock them down a rate class or 2. So that's where you want to enter that information. And if your client has had some sort of adverse driving record, you're going to want to add that in over here too. And again, the calculator can tell you what sort of rate class to expect for that particular person. But we're going to go back here. I'm going to go back in and select the health class. I'm going to run preferred and standard. I'm going to go back to getting quotes. And once this pops up, what I want to do is maybe illustrate that difference between a $50,000 and a $100,000 amount. So we're not applying for much coverage, and we have a pretty young person here. We do have a few companies offering preferred at $50,000. We're looking at $134, $140 a year. If we go to 100, look at that. The price is almost the same. We're $150, $160 a year. So in this person's case, really for an extra $20 or $30 a year, he's now doubled his coverage. And if you have a client looking at a small face amount, run the next rate band up, and I think you're going to be able to get them a lot more coverage for about the same dollar figure. One other thing I wanted to bring to your attention regarding figuring out a rate class. I mentioned we can check with insurance companies to help determine what sort of rate class a person might fall into. I'm going to click back on this other tab here. From our top drop-down menu on our website, we have another section under New Business, and it's called Underwriting. And if you go to Underwriting, you're going to be able to find the NAILBA Field Underwriting Guide. And this is a collection of questionnaires, and it's in PDF format. But if you're able to open up the PDF, this is 117 pages. This document has one-page questionnaires for just about every condition you could think of. And I'm trying to scroll through to find one here. And once it pops up on your screen, I clicked on the one for an angioplasty. And the top looks very similar. Every insurance company is going to want the client's date of birth. We don't need their name. In fact, that'll violate HIPAA laws, so please don't put a name on these. But this NAILBA Underwriting Guide will ask all the questions that an underwriter at an insurance company is going to want the answers to give us a pre-screening estimate of the rate class. Right? If I'm able to get this over to them within a few days' time, they'll be able to respond back and say, yes, your client looks standard, preferred, maybe a table 4, maybe a decline. Maybe they'll tell us to just submit the application. They'd have to see full medical records and won't give us a guesstimate. That's still better than a decline. But that guide is out there, and that's what we use all the time for people with some more severe health conditions. All right, I'm going to exit out of that and go back to our quoting engine results. I'm going to get this 50,000 off of the screen. Pay attention once you get to this screen on the website, to this left-hand column. You don't have to go all the way back to the original input screen to change your results over here. If you realize that, you know what, I didn't type in the right face amount, I put in 100,000, but I forgot a zero. This person really needs $1 million. You can add it right over here, and it will take a minute to recalculate, and then you'll see all of the results for $1 million of coverage. And I'm actually going to get rid of the 100,000 so that all we see is $1 million. You can also change the health classes in here. I'm going to get rid of the standard rate, and that will disappear. You can also add or remove term lengths. In this case, I'm going to add in 30 years, and then scroll back to the top. And eventually you'll be able to see that there's a second tab that appears at the top showing the prices for 30 years in addition to the 20 that were already there. If for some reason there's a particular company you don't want to have in your quoting engine, or you only want to select just a few, you can do that over here. I'm going to go ahead and select all, because some of those companies were missing earlier. Our riders appear over here as well, as do the table ratings and flat extras. So just about anything you saw on that initial screen can be added from this one over here. Now this quote comparison, if this is something you want to send to your clients, you have some options here. And the best way to do it, I found, is to click the button to the left of the company name. It will highlight that quote in yellow. And what you've now done is create a comparison. I'm going to go with the top 3 right now. And if we go up to the download button near the top, you're going to have 3 options for different reports. The one I use all the time is the list report. And if you click on that, it will create a PDF, which you can then click on to view. This gives you, in a fairly neat fashion, the company names, their AM Best ratings, the age that the company uses. And in this particular instance, you can see that the top 2 companies use the client's actual age of 41, and only one is using the nearest age. If he was, age 42 across the board, maybe we'd see a couple other companies come out on top. And then it gives you every mode of payment that company offers in this case. So I prefer that layout. Feel free to experiment with some of the other layouts if you like. Here's comparison ledger, for example, if you'd rather see it written that way. The quoting engine will also let you display it on your end with any mode of premium. If we change it to monthly, immediately it changes all the rates to monthly. If you would like to know more about a particular company or find out about the underwriting requirements, all you have to do is click on the product name. In this case, I'm going to click on Trendsetter Super. And in this case, we don't have much of a description available on this initial page. And sometimes you'll see that. If you click on View All Details, this is where you're going to get a listing of all the rate classes, what's available at what age, the minimum and maximum face amounts for the particular product. You'll be able to see where the rate bands are. They list that down below, so you'll be able to see if a client might get a discount if they're close to one of those levels. The conversion options are available here too. In this case, Transamerica allows its client to convert up through age 70 or age 75 if they're preferred plus, or the level term period, whichever of those happens first. I had mentioned the underwriting requirements. You can see that listed over here. All you have to do is find this person's age and the face amount, and you'll be able to see what's required. The build charts sometimes are out here too. Even though the quoting engine calculates this for you, or it can, if you think the client should have received a little bit better rate class, you can go in here and see how close they are to that required build combination. And we can also see some of the other published underwriting guidelines here. Where exactly does their blood pressure need to be? What do they say about family history or aviation? Again, this is something that companies used to publish and send out to everybody. So if you want this information for a particular case, it's out there for almost every carrier. All right, so I'm going to back out of that. And the other thing this quoting engine can do is allow you to go directly to an application. And if you click on the blue Apply button, in some cases you're going to have 3 different options here. An e-application, paper forms, or a quick ticket. Paper forms will take you to the PDF documents, which you could then save or eventually print to fill out the old-fashioned way. An e-application is going to launch the iGo e-app system, where you will fill out basically a full application online while the client's on the phone, or they could be in front of you. At the end, it's going to be emailed to the client for verification. They type in an e-signature that goes back to you as the agent for an e-signature, much like the traditional paper transaction, only this is being done online. And then you submit it, and we receive it here. The quick ticket option, if you see that appear, it's a little shorter application on your part. and it does usually it does not go to the client for e-signature. It goes straight to our office once you've submitted it. And then the client will receive either a phone call or a link from the insurance company to complete the health questions. And the insurance company takes it from there. The Quick Ticket is by far the most popular and, in my experience, the easiest system to use for taking an application. But you can go directly there. It feeds over all the client information you've already put in. So this is something you could do very easily over the phone with somebody. So, and I just looked at the time right now and realized I'm running a little bit long. I did want to cover a couple things with the GULs because they're a little bit different. So I'm going back to the main page here, and in the drop-down, instead of term, I'm going to select GUL as our option over here. And as we're waiting for the screens to catch up, I'm going to enter some other data. But with the GULs, we're asked to select a maturity age. So this is basically asking us how long would you like the client's coverage to last. And I always default to the age 121. That's a lifetime guarantee. Why do I do that? Well, the price is not much different from that or age 100. If you have a client with some severe health problems, maybe you don't need to worry about that. You can run them to age 90 or 95. Another little tip here too. If you have a 70-year-old looking for a 20-year term, run the 20-year term, but go in here and run a GUL to age 90. In some cases, that GUL will cost less than the 20-year term will, and they've got coverage for the same length of time, or even if you're close to that age. And that combination, it's worth looking at the GULs. Something important to note, if you select any riders with the GULs, they work great with term, but for some reason this quoting engine doesn't seem to know how to accommodate that. You'll see very few results, sometimes no results. So even though the riders are actually available with the product, I would not try to quote them in this quoting engine. It will get you in the ballpark. We can use some different software to add those riders on later. The health class works exactly the same. And same thing when we go to get quotes. And once again, you'll see a listing of all the companies that offer coverage for that person in that situation. One other feature before we wrap it up here, if you want to save a quote, there's a button over here. Although you do have to select the products you want to save. I'm going to choose the first three. And then if I would click that, it would save it in my system. When I log back in, I could go to My Quotes and then see Save Quotes over there. So I think that's everything I wanted to cover in this quoting engine. Those are some of the little tricks of the trade to making this work well for you. And put in a little plug for the next webinar in this series. In 2 weeks, we're going to cover some additional things in this quoting engine that, unfortunately, the quoting engine doesn't tell you. So be looking for the webinar that says life insurance quoting going beyond the price. Not everybody is just going to buy the lowest price product out there. Some of these products have critical and chronic illness riders built in. Quoting engine doesn't tell you. So I'll walk you through how to find that. Some of them offer coverage with no pyramid exam. I'll review where to find that on our website. Some have better conversion options than others. And then a couple of products out here have a premium that could decrease over time and go down from what you see listed. And there's another one that could have a decreasing death benefit at some point in time, and we'll review how to get to that. So there are several reasons a client might purchase beyond just looking at the lowest price out there. So I'm going to open it up for questions here, but if any of you have to go, I want to thank everybody for joining us today for this webinar, the first in the series of 6, and hope you'll come back for the remaining 5.